Okay, so I'm going to post this in that Hightail link, and in the comments, the link to this this platform. I'm always building up the platform. This one is a combination of drag and drops, but two different styles. The one that says limit drop in its own folder here, it's going to be, if I place this above the market, it's going to be a sell limit, and if I place it down here, it's going to be a buy limit. So what's going on inside here is the way I labeled it was I almost cover every pip for 10 pips until you get down to the bottom here. So when it says 0 by 1, what it's meaning there is, let's see if I can zoom in here. So this means that you're buying right at a very exact single price. Here it means that you're buying in a 1 pip box. So you're buying 1 ticket here and 1 ticket here. So you end up with 2 tickets. Here the box is, say, 3 pip range. So you're literally counting off 3 holes, 3 spaces, 1, 2, 3, but that ends up being 4 tickets if you buy the top 0 of the box. So this is buying every pip. Now, this is 10 pip stop, which in essence is going to give you, if there was no spread or anything like that, this would be a 7 pip master stop on that whole bank. So the market comes crushing down in, and you've got the same spacing on here that you do. The stops are literally the same spacing. So you have a 3 pip box for the 4 pip grid for the stops, and that now the targets can be in a pack up here for there. Now some of these are worse than break even because you're never going to see, without risking 20, sometimes you're never going to see the 10 because they're going to keep kicking you out. When the market's highly volatile, the chance of getting filled, the chance of taking profits of 10 pips during this is very high probability. Trying to put 10s in here, you have to put the 10 buy limits down here and maybe not get filled. So it's a real balancing act between what's probable and what's greedy. So here, 15 to make 20 is a little more realistic than maybe even 20 to make 40, because 40 is quite a bit of pips, and these are limit orders. So really, if you're really close to the market, say you wanted to buy at the market with a 20 pip stop, you would just simply put this drop. If current price is here, you're just going to put super close. So psychologically, it may be a daunting task so you want to start out with these onesies up here, and it's a little more economical as far as what takes up space on your platform, because you only have to have the, this is dualistic. This is going to be a limit for sell and buy. And so the art of it is to figure, well, I think it's going to go up 20 pips, and I'll put a 10 pip stop, which on here is really 8 pip stop because it's going to buy 2, it's going to buy 2 pips apart, every pip for 1 space of 0 pips. So here's a pretty this is 3K, right? Now you can just do the math here. I did the math on a lot of these. This whole thing here, I think I did the dollar math. If these are 1Ks, this would be $2 to make $4 at the end of that. So this is risk 6 to makes 12 because you're going to 3K, 20 pip stop. Every time you drop that, slightly different increments. Now this is where you're painting with a broad brush, because you're saying I have enough money in the account that I can just lay in these, and these are all set to 8 hours, and it says linear because it's spaced every notch. Now 8 hours, you could set this to 12 to a day. it starts to become a huge fork in the road, and you start to get exponential possibilities as you go off into the vanishing point of what you could, you could have insane orders that buy every 28 pips or something all the way till China. And so it's really, now once you get to, I left out the, so right here, 6 tickets, this full box, every pip for 5 pips. Here I just went to 9. I wasn't going to go to 7, or I didn't get there. I guess you could fill out it depends how mentally ill you are. You just do whatever you felt you had to do. Now, here you're buying a 10 pip pocket linear, say down here. Now this is risk 20 pips, make 30 pips, which is more realistic than 20 to make 40. So you maybe put it down here. Obviously, this is deep enough that now if this is not a lot of money to you, it's not going to matter. You could just keep going like this. Now you have to be careful that you have enough money. Now here you might go flat and then start buying at the round again. So they take you out of that, like, boom, you're gone. Now 8 hours, right? You think we're going to drop down there in 8 hours from this is 4-hour chart? $1, you're really going? No way. The next obvious place to get in here is this top. So you might build a bank in here, risk 10 to make 20. But that's up to you. The disclaimer is that if you lay too many orders, you could blow up the account. I think that's obvious, right? It's the used to call it bite off more than you could chew. So that kind of stuff's still relevant apparently. Here, the same on this top side. If you want to sell up here, you place it right there. Now, you're scalping off something that's so way out there. I don't think it's going to be there 8 hours, but if you want to check the way these orders look on the daily, you would just make sure your scale's fixed, because all that's going to matter is the price. There's the weekly, so obviously you want to sell up this wick here, which just happens to be a round number. Go figure, right? So right there, you could start building right now. Tonight, maybe it does go up there, right? If you got, depends on what money you got. Here, maybe you want to go flat here because you don't want to blow up the account, so you start selling again in another wave. It's just another harmonic price point. But once you scrunch it down like this, like most people running their charts, it looks like one ticket. So the market's very vertical, and look where we've come. If you were down here playing this game, imagine what your tickets would look like. So if you were down here, you'd be like, okay, I just laid that bank in there. They stopped you out. You're putting a ridiculous stop on it. And here, if I would have dropped it here with a 30 pip stop to make 60, perfect trade. It actually went there. And then if you looked at that, now I'm going to scrunch this down because it takes up too much. So maybe you just care about how long they last. If you're running this is another thing. If you just have an 8-hour broker, like you have one broker and all he does is an 8-hour script. This way you can stay organized almost. And then you can just say, well, no fills, right? Well, what kind of effort is to drop these in here? Same on the sell side here. Had we launched a sell limit up here, I can't drop that because anything below current price is going to naturally be a buy limit on these limit grids, and everything above is naturally going to be a sell limit. And so up in the treetops here, where all the sellers come in, here you would have had a 100 pip stop on this thing. You'd need a 100 pip stop. Now, what I did is, as you go down, you get to about 12 pips here. Now there's a 5K in a 12 pip range. This can take a lot more of a beating and the stop is break even. $15 to make $15 down here. Still linear. Drop it up here. Look like a good trade, good place to sell? Of course. It's going to go up there tonight? No. So you have to be realistic. Like, where are we at now? Okay, I could put that up here. I could just find it. You put 20 fibs up there and just put up 20 orders. Just cover the whole area. You really have to. You don't know if you're buying real estate, you're going to buy in a zone, and hopefully something's going to become popular. Who knows? Here's risk 20 to make 28 hours. In essence, this is a 10 pip stop because you're buying a 10 pip range with a 20 pip stop. So you can see what it looks like here. 8 hours. Would you sell up into here for a scalp? It's not going to make it to that target unless you wait for that whole thing to play out. See, even this looks like, I don't think people realize 20 pips is hard to make. I mean, if you really have to make it right now, I talk about all these pips. I'm like, damn. So now, if you go to the 4 hour, you compare that to here. You say, well, it looks too close to the market on the daily. You go to the 4 hour, you're like, oh yeah, sure, why not, right? You go to the hour, you're like, never gonna make it. Or you go to 30, you're like, oh boy. Now, this is what it looks like, and this is when you just have an 8 hour trade plan, say, and if you waited another 4 hours to drop an 8 hour bank, you'd have the other one disappearing as you're getting up there. So when you get really, really high, you can put ones that last longer, or you can get more aggressive. You can have a very focused order bank. Here is a 15 pip range. Now, this is the first logarithmic one that starts with a spacing. It's not necessarily logarithmic, but it's going to be like a Nautilus, expansion. It's going to be like a French curve. It's going to be, this thing that's not linear. And it could be a clusterfuck. Actually, you could make a just a staggered psycho. But you have to realize that in these ones, the stop rides exactly along with the entries mirror the targets. So you're really just doing multiple drops. And with the logarithmic one, you are getting a different ratio. And I don't know what it is for the whole bank. It's easier to figure out the linear risk, because logarithmic means as it gets down there, it's buying closer together, which is less risk in essence, because you're getting closer to that pack of stops. If you consider the whole drop to be one risk plan as opposed to each ticket within there, and that's where it gets complicated. So people say, well, what's the risk? You just have to say, well, on average, you could take all these scripts and say, what if I dropped all these in the account? I don't know what that number is. Like, how much money do I need to drop each one of these and wait 8 hours? I have no idea. And it depends where you drop them, right? If you drop them out in Bozo land, like down here, like they would say really in no man's, like I'm going to put it here like at par. I'm waiting to get filled down here, like really? Like, look at these orders I placed down here. So, yeah, I'm waiting to get filled here tonight. And that's the thing. You're really letting the market come to you in this circumstance, even if it's down 5 pips. Now, if I wanted to buy here at this last known top bottom, I might just go in with a 1 ticket here, 10 pips stop, right? You have to be realistic. If you're lucky, they come there, but they could just come ripping down tonight. This thing's overbaked on the daily. Look, the daily, are you getting in on that? You're nuts, right? So to buy here, and what time is it? The market's been open for 2.5 hours. You really buying up here? You're fucking nuts. I mean, you could buy on. See, now this is where it goes. Oh, you can trade the 5-minute chart. Look, they've been banging on this round handle all night, right? So if you've got a good spread, you just keep on milking this 5-minute chart. This is the opening of the market. How many trades did you see? You only made you made 8 pips. You make $80 on a standard lot here, if there was no such thing as spread. Now the spread here is tight. This spread's is a half a pip right now, euro dollar. So I have a hotkey here that just runs a 15-minute. Oh, maybe it's not turned. That's right, I have it turned off. Okay, so I just drop a manual order right here. I'm gonna buy right there where all the stops are, right here, and 10 pips stop on that. Look to make 20 pips. Because why would I buy it now? It's dropping. The guy would wait 5 minutes. At the bottom of the hour, we could spike right down, smash through that, and go flying back up, and it could be a scalp. Now, if that's true, then I got to put this order in and risk more to make less, and a higher probability. I'll put a 20 pip stop in to make 10, because I can probably envision the markets spiking down here. This is $2. This is $4. You can just count it up, right? This is a lot better than lottery tickets. Trust me, people scratch lottery tickets trying to clean up. Here, you're $2, right? Scratch and win. You put them down here. You just don't put them in the same price level. That's all. That's what the problem is, to duplicate a mistake. Or just you're trying to get in a catch a falling knife, and you've got 50 fingers on each hand. You got 100 fingers, and you're going to catch it. You don't know when this thing's going to come back to. Now, if you go to the half hour, you can see here's the trading area, but you know that the long-term vacuum, like this double bottom here, once you take that, we just nicked it here by like depends which broker you're on, but look how close you came here. And then we just come back, crush in here, and then it's going to retrace. So you have to envision the retrace a little bit ahead of the crush down. Here is a 4 tickets, 3 pip range, bad ratios here. Risk 20 to make 10. It makes sense if you put it down here and don't duplicate these orders. So it's coming into these traps that have a predetermined, that it's a very clean, you may have to reload to keep making money on this script, but you see it's going to come into the top. You make money when it goes here and doesn't go to these red lines and comes back up. And if it only comes to here, see my exits here now, these are the exits stacking up from the bad ratios. So if you're going to trade double your money and half your money, you're trading break even. I mean, you can make a lot of money trading break even if you get in properly. Now, or you could just build a hand logarithmic thing here. Now, the logarithmic one, I didn't drop it, I don't think here. The spacing on this is, I think I started off like 1 pip apart, and so very bottom here, you get very broad brush down at the bottom here. 40 pip range, 5 tickets, 80 pip stops. 80 to make 80, 8 hours. This is Illuminati technique here. So it's like Scientology. If you open the code on this, then you'll kill yourself if you look at the code. But here, if you dropped it where you want to duplicate nothing, I don't think it's going to fill, but I'm going like 2, 4, 6, 8 apart on that. I think. Here, let me go to fresh victim here. Let me put it down here like this. Okay, here's 80 pips to make 80 pips in a 40 pip range, starting right here. So I'm about 2, 4, 6, and maybe 8. Yeah, 2, 4, 6, 8. I don't know if that's logarithmic, but here you open it up. So you just hit the enter key when you're on top of this, and this is what's going on under the hood. Is that where you drop your cursor tip is 0, you can't see it, so the first gap is 15 pips from your cursor. So the next ticket, you can change these numbers, but you'd also have to change these cell limits down here to mirror that out. This is the minus, so this is going to put it below. Now, the spacing here is 4 pips, 4 pips. Actually, I don't know what I did there, but I try to make it staggered, let's say. I won't say it's logarithmic, I'll just say it's unlinear. But it could be, and it could be geometric. I had some geometric ones I posted once, and that was the amplification, so it's 2 times, it's kind of like, it's just a geometric, instead of Fibonacci, it's like you just keep doubling the next number. And if you really want to load the wagon on that same script, it would look like this, where you just keep dropping that hand place and build a, so you're really looking at something where you have a brush and you're painting orders on the chart, because all these are good prices. You know, it's like you go to the, do you ever find something that actually fits you and you're like, I better get 2 of those because I'll never make it back to the store. And it starts to look like one ticket now. Once you take the scale down to here, you're like, oh God, really? And it looks like a better trade here maybe than it looks like here, unfillable. I really don't think it's going to fill tonight. But this is definitely coming back. Now, if you didn't sell up at the top here at this new high in the 4 hour, and you're not one that's willing to make 8 to 12 pips, if you're looking for the bigger fish, so to speak, course, you had to sell on Friday there, so you had to take that white knuckle ride and sell up into this painfully obvious sell area. So you could also take your rectangle, which is not turned on here. You have to go to customize and add for some reason, the rectangle. It's like a conspiracy. They don't want you to find out a trade block. But here's the rectangle. You want to put that into your arsenal. You get rid of the rest of this shit. Horizontal line's good. Trend line's good. Text, I don't know. But here we're pulling back, right? So we're going to buy this as it comes back. There's your rectangle. So this would denote, say, if it's going to be a 12-hour script, you can kind of picture that that's half a day. Here's 12 hours. And if it's going to be a 50 pip coverage, see, this is a little overkill here. You'd had to be in a script that maybe lasted a month. I think you can do a monthly script if you're really lazy, and you just have it up there. Now they wouldn't have filled you if you got really cheap there. You kind of had to start selling. And this makes a big difference. Say your stop's here, and now you're in a 25 pip box, and you can see that this wick is where the liquidity really starts, and now we're crushing into the vacuum here. We're going to retest this and probably take it out. So you'd have to say, well, what's realistic though? The scalp's always the more realistic trade. So here maybe I go risk 20 to make 5 to 12 pip range. Let's just double that up and just go real hardcore and just paint a block, a big dense area in here with that kind of high risk, high probability, and just could build them in here for 8 hours tonight. So you might get clobbered on some of this stuff, but how do you really know? Does anybody really know how far this can crush back in before it bounces? And maybe this is the top for the rest of the month, the week. Who knows? I mean, look at this thing. Anybody that took the insane risk of selling new highs, which if your orders are spread wide enough is not a scary thing at all. If you started selling here, you're almost all the way up with a 75 pip stop. Imagine all these lines here, your entries. You're up pretty good on that. You probably take out 20% of that trade, and you just made. If you went for like the higher it goes, the denser the orders go. Not necessarily the bigger the exact ticket, because you don't want to be in this thing where you want to take advantage of the fact that it's getting in a spectrum entry. It's not a precise entry. So the slop is in your favor. And here you can see if you have enough money in the account, I'm about to get filled maybe on this buy limit. Okay, still got the white line's got to make it to that buy limit. And this looks like a no-brainer. I want to buy more on pullbacks. But it's for the scalp. It's everybody. The scalper is making money while the trend traders, they're all coexisting in there. And maybe the retracement, the swing trader is like seriously short here, and once it bounces off this, he'll take profits and then he'll reload on the next swing high, because once you get the rhythm down. So here's your doji breakout, last gasp. You're selling on these wicks up here. The sellers are cashing out as you take out this wick, so it's a wick to wick game. I think it can still come back into this. So this is the hard part. How do you gauge how many orders to throw in here in this situation? If you do it you do other currencies going like this, and so you can see the pullback. The best thing would be to scalp the bounce, because that's always the markets just don't move in a straight line. But getting that precise area where there is going to be a battle, and you'll see this sweeping crush like imagine you had the spectrum of orders coming in here like this on the right here. You started buying the new lows here, and let's see. So you really loaded up down here, and by the time we came back to this doji, you were out, and you maybe even added on stops here. Now, the stops are in this platform also. You got to pay attention though, what kind of order you're dropping. Trading at the market's kind of easy in a way because you know what you did. If you did it every hour, say, so you really have to pay attention to the clock if you're trading at the market because these things. Because if your buy limit's too far away and you think, you know, hey, this isn't ever coming back there, and it's like this is it. I'm gonna start building a position right now, a mini position, and then realizing that the next session coming up, you could have a complete plunge into these orders. You finally get filled. So do you want to try to make 5, 10 pips in Asia, 12 pips in Asia? And so you just set your sights lower, and it seems pretty tame to trade like that. And then you have the, well, I'm just put an outlandish order way down in Disneyland and see what happens. You'd be surprised because you probably wouldn't have been around. You may not have been around to buy at this round number on the British pound. So you really now imagine if you put a super dense order pack in here to make a measly 50 pips, and you get the placement right on that. Maybe you had something like your targets to make 40 pips here, and these are 3K right there, and you just kept loading them up right here. This looks like you're buying at one price. This is 3 pips apart. It's hard to believe now. Here it would have been to make risk the 10 to make the 20. They wouldn't have stopped you out, but once you layer that up, you get up to 100K real quick here. You could blow up an account easily. Here's a very focused order right at the edge. Here, you would say buy here. And then when you go to like this, you're just like, it's just like one order. But that's really what it's about, is getting that perfect fit, you know. And if you're really doing it, you probably have a 12-hour order. Like you have to come back here every 8 hours and do the whole thing over again. So maybe you put the daily orders in, and they've got, maybe you actually, I guess you have to keep track, right? Because if you put the dailies in, too many dailies in, and you look at the chart and you're like, here comes the market into a painfully obvious buy zone, and you're like, Jesus, man, you still got to start deleting those. So at the very bottom here, I have a you can start peeling closed tickets. It's a drag and drop closed ticket. So imagine this thing screaming down, and you're like, Jesus, there's no it's going to go so down. You know, just presupposing you're babysitting your thing. You can start trimming off these top tickets, closed ticket like this. And maybe you want to leave the delete all objects. Maybe if you have a journal of all the drops you did. If you go to the half hour, you can see the drops you did earlier. And in the 1 hour, you can see if these were 1 hour drops, they should be gone by now. And you can make different colors, arrows inside the code. You know, once you go into the code here, so here's the maximum amount of tickets. Here you could change, you could take this 10K, this is the biggest order I got. And you could take that, it's every pip for, this is super aggressive here. 30 pip stop makes 60. But if you open the script up, you can do the spacing here. You can see that we have number 9. Number 9, because 0 is where your cursor's at, so it's really 10. We're counting 0 for the total ticketage here. But you could make this thing 40 pips deep, 30 pips deep. You could make an elaborate, and I'm talking like Fibonacci-esque. You could have Fibonacci shit in there. You could buy 55 pips deep, 34 pips deep, 21 pips deep, 13, 8, 5. So whatever makes you feel, and then you can definitely blow the fucking account up once you start getting carried away with this 10K drop here. And the other thing is inside here currently there's the comments do not match what it really is. Here's the time. If you want to change the time, but here all the tickets are turned on. This is maximum amount that these, unless you want to start copying and make price number, but you don't want to do that. It's a drama. This, it has the time stamp, which I don't see anymore. So this is like, nobody has this code. I'm just saying. No, I'm the only one that I've seen that's still posting, because I found it and I grabbed it, and there's not even a timestamp, and they got rid of the pending order inside of MetaTrader. It doesn't even come with a pending order anymore. I don't know if that's a conspiracy, but here I've got the size listed here, but the stop, this will come up in the comments when you place the trade. So in the, if you want to see this make sense, I'm abbreviating all these so I can save space. And I don't think this is correct, actually, so just copy this wrong comment over here. But, because it's a buy. And if you edit it, you'll see an asterisk come up here, and you come up here and compile the whole thing. If you get any errors, if you get any warnings, you'll be fine, but if you get errors, you'll be in trouble. And, you can change the color of the arrow here. I've got black for all the limits. I made all the limits black, just so I could differentiate that from the other orders that are in here, which are the buy stops, and single buy stops and single buy limits are in here too. So this you can get pretty elaborate here. Here's 36, 10K on 36. So if you do it here, it looks like this. It's hard to believe that broker lets you put orders down here that'll never fill. But I don't know if the people over at the servers are laughing, but here's 20 pip. They're like, look at this guy dropping orders. Look at, he thinks it's going to power. But here's a logarithmic one. See what that looks like? Oh, fuck. See how this is a compressed entry? But also the stops are compressed also. So this gives you a little more breathing room on a plungeola. Now, this on the guppy might be the most genius fucking trade, or whatever that is. Market comes down, swoops in like this, and maybe it does tag out a couple, see, but it gets near there, and it only took out 2 of your total bank, and you have a compressed risk down here. This becomes actually a heavier weighted order in the context of a total fill on that bank. A partial fill here, once it gets to here, these stops are spread at the same thing, so that makes a difference. Because if you only get a partial fill here and you don't commit to this dense bank, now if I double that up, it would amplify that, or I could put another logarithmic on top of that with a different ratio. It gets very complicated very quickly. I could drop it there, and now I've got a denser version. Let me double up this 10K on a 36. Here's a 50 pip stop. And so the market's plunging, and you've got money. I'm talking you've got money. Like, you get up to like 200K here, just keep dropping 10Ks. What 10 drops, so you're 100K, right? So if I just went like this, I'm buying 100K down here, like, really? Okay, next 8 hours, like, you can see how quick this could get to be dangerous. Now, I don't think we're going down there tonight. I think it's hysterical that you're putting, you couldn't do that in the stock market. Could you really, would they take your, oh yeah, really? Okay. They're like laughing at you, right? It's the nice thing about computer trading, nobody's going to laugh at you on the phone. Now the other ones I got in here, I try to make this organized, and this, every time I do it, I try to clean it up. Now I wanted to get this on my tablet, so what I did was I made it so economically named, you can actually cut the word drop off there. If you open up, this is all the dailies with just the pure pip. 20 pips to make 20 pips. 25 pip stop to make 15. Now, the unique thing about these is that they flip. They're all single orders, and they flip from being a buy stop. If you put it above, it's a buy stop. And if you put it below, it's a buy limit. So this is very much a compromise between buying at the market. So you have a confirmation, continuation, breakout. If we go up here on the 15-minute British pound. So here I say, oh, I want to risk 25 pips to make 15, risk 25 to make 15. Maybe I'm looking for a breakout of this. Now these are set to a day. So I try to make this, here's very streamlined by D1 and by H12. Now, H12 orders will run inside here now. You can have H6, H1, 2, 3, 4, but I wanted to make this like you got a day job. Here it's break evens, and the comments on here are actually accurate. So they denote in a very summarized way what is going on here. We have 4 hours. Now, the problem here is that the name of this is 30 by 30. And if you have this, if you don't bring it along with the folder that's in the summarized, you're not going to, you have to open it up to see what these things really are. You should open stuff. You really shouldn't get too carried away. Like, got to keep track of the labels and what this stuff is. But this is buy limit H4, buy stop H4, and I have blue for entries, and all the comments are currently correct on here as far as the time. Now, when you want to make a different ratio, got to come up to the top here. It's very simple. You just say, first you rename it. So you always want to rename it first, and the name dictates what the trade plan is going to be. So you say save as, and now you're going to say, okay, well, I'll risk 28 pips to make 36 pips. And I would say, okay, save that. Now we have to hurry up and name it so we don't forget, and go 28 pip stop to make 36. Then this is a size. The slippage, I've just left that at 3. I don't even know what it means. It just drops on the chart. It's just, I don't even know what it means, honestly. Here's your time, and this one is very simple. There's no elaborate editing on these. More work, though, naturally, right? This is painting with just a little pinpoint paintbrush. You compile that, and here now you're looking at the stops. Now, you don't want to edit this unless you rename it first, because if you want to put a 16 pip stop, let's save as 16, and these are all just, 16, maybe you're going to make 20 pips. It's kind of a break even if you put a bad spread in there. So maybe we'll go 22 pips here. Now the problem here is if you keep doing this, you end up with maybe too much stuff you can't even manage, because you're kind of over-fine, if you're on a big canvas. In other words, if you're painting a mural, you're not going to use a pinpoint brush. So if you're trying to trade the guppy on a weekly chart, you're just not going to go there, right? You just have to realize some things proportionally. It's like the flies that land on the wall, on the ceiling. You're thinking, I could never do that. Right? I mean, he doesn't weigh enough. He doesn't weigh enough, and the weight does matter, and the spread is important. I never heard any of these guys. I watched a bunch of these people talking about this, that, but they never talked about that spread being so brutal on the outlandish currencies, and that's why they look like great setups. They really give you amazing looking patterns. These crazy. Some of this stuff moves. I mean, some of these currency pairs, like euro to the CAD, was it euro to New Zealand? Some of these things move so hard that you need a 50 pip stop just to say hello. I mean, just to get in, you'd have to run 150s. So right here, a 16 pip stop to make 22 is God knows what, right? Okay, so I'm going to publish this thing. I'm editing along the way here, but you can get carried away really quick and getting too much going on. So you have the single drops, and I put in the cells beneath here. SD1. D1 means day to MetaTrader, so I just try to keep the code the same as what they call it out as. H12 is what they call these. So this is a break-even 12-hour sell. So if I wanted to go and put a hedge on right now, I'm gonna go short and long. I don't know, right? So if you don't know, and this is the point of the doji, is you don't know. So here we're just about to end up in a doji here on the 4-hour in a little while. I guess in about 1 hour we're going to complete this. Now the 1 hour we had a breakout here. You could have put on a hedge here and made something up on both directions possibly. Go to the half hour. We have buy stops above that haven't filled, but maybe it's going to tank, so we put the tank orders in. It shouldn't matter too much. You could sell at the market right now and get a slightly better price, but it's the thing is to get that balance between, did I miss it? Is it too late to get in? Should I just wait till this bank fills down here, and maybe these buy stops will fill, and I'll go here's a buy stop, 30 pips to make 30 pips right there. Looking for a 30 pip rally, which is kind of greedy. More likely, I would risk, and this is paying attention to, this is a daily order. This is going to be here all night, going to be all day. That's going to fill. If we go up, I mean, we've got plenty of time to fill that order. So if you you could build a hedge right here, manually, here, 18 pip stop. It's really a market order, for God's sakes. I mean, some people would pull the trigger after it broke out anyways, or they'd, like if you said right here on the 5-minute chart, here's your entry in the 5-minute, you had to sell that doji, right? Either on a stop or at the market. So what's the difference between you putting a little bit worse by 3 pips? If you're waiting for confirmation for this to go down, then you're going to sell when it comes back up. Why don't you just sell here? So you can't really and if you have your scale fixed here, when you go to the daily, you'll see how ridiculous, right? So if you keep perspective on the depth of the market. So people talk about this level 2, level 1 trade. Just stretch, just go to hit F8, go to properties, and just fix the scale. When the market's going into historical prices, it gets squirrely. You might have to go back to normal scale first. So if people typically trade with stops, you would just say, okay, well, I'm just going to buy stops up here. Now this is 4 hours. So realizing that this is a little bit safer in a way, I'm giving this thing now this will become a buy limit down here, and it'll be a buy stop here. So I want to go long. I don't know if we're going to go up or we're going to retest. So if I don't know, which you probably don't know, you'd say, oh, I'm going to put buy stops here in case we go up. But in case we never go up and we have to go dippity-doo down here, I'm going to get in this power bank here, and I'm going to scalp out. That's all designed to scalp out. So I don't think I've gotten filled on anything yet. And, okay, I got filled on something here. So I have the option to get out. There's the comment. Now, this is the buy limit from the grid. This is the drops, the short abbreviated name. So this is part of a limit grid. Now, if you wanted to know how good you're doing on those, you could make the comments and spell those out in a spreadsheet, and then you could, if you really wanted to go there, right? But you should probably have to hire a staff of people. I just trade like, I just shoot. I'm just looking at it and going, I'll accept the risk. I don't even want to try to say, well, that one works better, because then I'm lost inside. You'd have to hire somebody, right? So you can't do everything at once, and so I just don't have a staff. Now, if here comes top of the hour is coming, so this is very critical. And maybe you want to get out of this trade. I'm up, I'm down 3 cents. I'm in a 1K. Leverage here is 500 to 1. I'm using $2 to control $1,000. Hard to believe, isn't it? Okay, so the sells, and if we go into a hedge here, some brokers, if we go into a hedge, we will use no margin if we're totally balanced. Now we just went short and long. No, they're not giving me a discount here, but we have a hard time losing now because we're only short one in the end, and if we get out on profits, this is where you just have this commingled situation I was talking about earlier, where you're just like, yeah. Now you might be right on the parachute, the stop and reverses might make the money. If you see your equity go up and you see you're coming into the limits, and now maybe you take all profits of what you're up on, or you let the whole thing play out. Now this is where the standoff between the old saw, you plan, you trade your plan. If you let them spell out themselves out, there always has to, just like you would intervene on top of a robot that had its head up its ass, you have to come on top of maybe an order that you placed and get rid of it, because you're like, you know what, this market's screaming down. I've seen this before. I have a huge exposure to the buy limit side. I'm short right now, and I'm actually making money, even though I don't want to, because I usually like to buy. So I could have a hotkey, which I don't. It's inside the data folder in here. So if you go to File, there are double clicks in here, but I just kind of, unless you're really experienced, I don't recommend it, because one thing about these drops, they'll never crash MT4. The double clicks could crash it. So in the data folder, if you open up this data folder, you'll see the MQ4 folder. This is stuff I'm going to post in the, but I'm just going to put the scripts in. It's inside of MQL4. The scripts here, inside there, I took the hotkeys and I zipped them up in a folder called T. Don't ask me why. Maybe I didn't. Wait. No, this is like the whole thing. This is literally the whole platform with hotkeys included. So I'm just, I just want to let you know that that's what's going on inside. That is total. It's everything that was in the main folder. So I'm trying to clean it up, and I just got this idea that I would just zip it down. This way it can ride along with the whole thing. I also have the zip down limit drops here, which are now different than the ones I've edited. So it gets really out of hand really quickly here, and there's just a classic closed ticket, and there should be under the trade. You know what? I got rid of that. I'll have to unfold that. Jesus. There's one called Take All Profits. I took it out of there. And Close All Open and Pending. So I accidentally folded it into here, so I have to open this up and grab it. It's in here, Trades. So I can take this and copy this into the main. Man, Windows, I want Windows 3.1 back so bad. I can never find my way around here. So we just paste it into the main script folder on top. And so now we'll see, and then you have to, if you don't want to restart the program, you need to compile one of these guys so that it activates it in the list. But there's double-click scripts in there that are elaborate. They're hard-fixed pips that they just launched. Okay, look at that. So you're winning on the sell side. Coming into this huge buy limit back. So how close do you get to the market's always a very kind of a the hardest thing is how close and how big should I get in. What's the ultimate kind of sweep the market can take here? So I'm only down 36 cents because I'm in a hedge, and I just picked up another. I think I just cashed out of something maybe. Let's let that go. Yeah, so that's, if I compile one of these guys now, I should have a jump up on the list. The trade should come up here. So here's trades. So if I wanted to, and I put the close all, I'm gonna have to summarize these so they fit on the tablet. It would just be T, and then I would just have O and C maybe, or O and P, or maybe all and profit. So here I made it hard to close them all because I'm pretty stubborn, so I made it very difficult. I had to open this up and hit close all because I usually want to let the whole thing play out. And here would be just if I wanted to get our profits right now, I would say, okay, well, give me all the shorts right now. So I'm totally flat on my, and these buy stops never filled. So it doesn't mean I can't put buy stops above here. So if I put, let's see, these are buys right here. So you can do it while the market's dropping here. This is really market orders, right? And then you have the buy limits like this. Here's the high risk, low reward trades, 25 to make 15. This is like a market order. So if you really want to trade at the market, it looks like this. The white line, if they let you trade inside the spread, which they do, so what's better? Putting an order inside the spread, and to know if your broker does that, you just go to trading and you put on a new order, and then you go to pending. And if it says at the bottom here that the opening price must differ from the market price by at least 0 pips, that means your broker will let you trade like an institution. I finally watched enough videos today to realize that the word retail means loser and the word institution means I'm a complete winner. But I think we all know that the institutions have lost tons of money. They're just risk managers, and there's solo traders that are just killing it. And I don't think they want to be exposed. So the buy limit single drops, this is the bad ratios. If you don't duplicate the price, and remember when CDs were going away, and they were going to these digital files. You go to these places with a nice price, you get a CD, a real WAV file. Just say no to MP3 files. I mean, the high end, the high frequency is a squirrely mess because they can't replicate the high frequencies like they can the low frequencies. Here's a kind of a greedy order, 28 pip stop. This is a complete swing trade. This is like ridiculous, and it might work out here, but you really think the euro's going to go up another 50 pips tonight? Were you nuts? So look how much money the people that stepped in front of this thing and sold up here. And how about the inverted hammer traders? Now the small body here, see your stops right there? That's where my buy stops are, and I got to delete those. You got to come back and clean up this stuff if you don't want to get filled at a bad price. That's obviously a terrible price up there. You're not going to add to your position up here, are you? I wouldn't. From past experience, it's a trap for me now. So I trim these off. You can either open up the terminal, but if you're trading multiple currencies, you just want to do this, and right wherever you drop this, it's going to peel it off. So you got to get rid of your entries. I made the entries a particular color, and some of these are going to reject the closing like this, and I don't know why. I've actually, that actually is a fill. I'm actually filling. This is a bad trade. I'm underwater. So I've seen it where it has, in real money, where it literally has not filled. It never went to that price, but they said you can't touch it, you can't delete it. It never filled, but you can't delete it because it's too close. You know, these are the ones that are in. So total, I'm all in now. And if I back up to the 1 hour, I can see here's where I really want to start buying here in this blue area. So I'm just going to go hog long here. Since this is a demo, I'd open up that limit grid if I wanted to go super aggressive here. And I put in these 10 packs. Here we're buying 6K over a 10 pip zone. We'll start buying here, and let's just buy every pip here. 10K right there. Looks like a real obvious smash down. Here, every pip. 10 pip, or 9 pip boxed every 10K over 9 pips. Okay, so that's pretty ridiculous. And if you look at it like this, it's scary, right? If you go to the daily, you're like, oh, geez, oh boy, that's close. Let's see, it's near the tops of these wicks. So when you're on the daily placing them, it looks completely different. And you're like, man, you must have money in your account. Here's break evens, 20 to make 20, 10Ks. Okay, so now we're underwater. These are all the hand placed drops, and then the grid limit drops are these other guys here. So set that by price. Do auto arrange. So here's the profit. So I'm up on this. Of course, it's always the last place you look. So the lowest order is the winner. And I usually don't want to move any of these. The discipline is not to move your targets and go with the original trade plan. I'm just saying a panic of like they used to call it windfall profits. They used to want to tax the fuck out of people that had a good day. They call it windfall profits, but I thought, really, does windfall? Doesn't it just go like across? But if you have a good day, you got to get the fuck out. Like if you just blew up your account in reverse or you made a bunch of money, you just get the fuck out. Because you can't let those profits run. Just the same thing on the plunge, you can't let your losers run. Same. It's a two-way street because that's a lot of money to make, and then you have to figure, wow, the market's really wild. Then you have to back up, just maybe delete all orders at that point. You can make a ton of money in a flash, and then the market's still crushing down, and you've got these orders that you said, oh, I'm just so fucking lazy. I put daily orders in these big grids, and next thing you know, that account's gone, or that account's taking a hit, or you let the whole thing play out, and you're like, damn, I'm all the way back up to where I was at the beginning of the day. Fuck. Then you say, wow, maybe I should put them in deeper and wait. Then you do that, and then they don't fill you. And then you're like, geez, so you go to the 15-minute chart. So that's real trading, is that you're trying to adapt to all these different styles, right? You don't want to be stuck in, like if you're writing songs and you're in the same style, but see, in that thing, you got a fan club, and you don't want to change style because they're like, if you change your style, we're gonna just dump you. It's like we don't know who you are anymore. But the market isn't like that. The market, you can wear different hats, and you can be a limit trader, a stop trader. You can be a buy at the market. You can be a scalper. You can be all those things at once, and you'll make money if you do each style correctly. Your audience isn't. You don't have anybody. Other than what you think yourself as, you're your own audience. Then you're just caught in this where you see yourself a certain way and you don't think you can do the other trade because you're like, man, I just couldn't put an order down in no man's land. I mean, you gotta be out of your mind. Like, but once you do it and you see, it's like reverse parachuting. That might be scary, right? Like, it's one thing to jump out of a plane and drop, but imagine you're on the ground and all of a sudden, whoop, you're up in the air, like in the plane. Some people might shit their pants on that. Like, what would you think if a helicopter came by and picked you up on a rope and then slowly dragged your ass up? Some people would feel safer jumping out with a parachute because what if the rope breaks on the way up? So that stuff, orientation-wise, is difficult to accept, and it really is difficult. And volatility is. People say, well, you need volatility. This guy today talking about lack of volatility, nobody can make money, and then he so a lot of stuff's contradictory because you really don't want volatility if you're trying to get in for the increase in volatility. You're going to make money along the way of that explosion of volatility. On the other hand, the volatility is going to fill those limits, and you're going to be able to play the retrace game. And when we go into London to this and that, you can see, hey, we could crush up, we could spike up into something, and that's short-lived. Like, you could keep on crushing up, and that's scary if you've got a bunch of limits sitting out there, because now you're saying, geez. But if you get your finger on the take profit key, if you're in too big and you see, oh, it's momentary, this is where you're going to just intervene on top of your plan, realizing you overplanned. People do this all the time. This is like the classic joke, where you build a boat inside your house. Now you can't get out of your house. So you can really get into woven into too many orders. And next thing you know, you're just like, and then you say, well, maybe, and then what if it had worked out? You just think, man, I got scared and pulled those orders out of there. And I guess it's the idea that you're building this, if you are building a boat inside your house and you don't want to tear the boat apart, you start to make bigger doors in your house along the way. And you eventually just put a garage door on your house, and you turn your house into a damn hangar. And but you have to gradually do that. It's going, it's like that. It's like a swing trade, right? Because you're going to take that boat out of the house. And now that you built a bigger doorway, now that you have a garage, you think, hey, I'm going to add on to the boat. My God, now actually you're in the other situation where the door to take the boat out of the house is bigger than the boat, and maybe you're going to think, well, I'm going to just use every ounce of space of the doorway now and build even a more luxurious boat, put an antenna on or whatever. You should pop those off usually and put, but the you build Noah's Ark there, right? It's a lot of fun, and so I'm going to put this in that link. I didn't cover every situation here, but I have the starter stem of the H12, the H4, the H8. It's not exactly progressively. It really would be H8 to H4 if you're going down, but you'd have to force that by putting a space in front of one of these or something. And then you go to the cells, and here's your 8-hour cells. You could build 15 minutes is usually as tight, but then there's a lot of dragging and dropping, and I think it's obvious where there's going to be a lot of price action to come, right? A price action that's going to happen. And it's typically going to be like down here. Now, if I wanted to figure I'm in too big, I'm up 30 cents now, and I'm thinking, geez, you know what? Should I let this play out? We just smashed into the round number. If I zoom out, this looks like a good scalp on it here. I got my finger on the trigger. This is my bad entry. I think that's on stops. It could be limits. Now, that's one thing that the single drops will tell you whether it was a stop or a limit fill. So I did make that originally wrote that in because I wanted to know whether my stops or my limits were doing good. I think that was almost like a better analysis of entry, and with no market orders here right now at all. No market orders because we all knew we wanted to buy down here at the round number. We also knew we wanted to buy on the very edge here as deep as we could get. It doesn't mean it's going to go up and this is going to be the most insanely good trade you ever saw, because we're just retesting this area maybe, and we still could go lower. The scalper's exit on the 15 is going to be right here at this body, and probably starting even at this wick. And you may not even see that price. I mean, anybody been in a trade where it only bounces 3 pips and never looks back? This is it, right? At the bottom of the hour here, this is the last move, right? Well, I've seen that trade. Now here, it's not even cashing out. It might be cashing out the 15 pippers, and if you have a 20 pip grid, you can see my targets would be getting out. This is $34 of margin right now. And I don't know what I got filled on here. Maybe I had a buy stop in there. It's going. Oh, and I got other currencies running. Forgot. I'm getting filled over here. I didn't realize. Okay, that's British pound fill. See, but it doesn't matter, right? It's a round number, so it really shouldn't matter, right? You're always going to buy low, sell high. That's why the extra margin. So here, another problem, another reason why you want to separate accounts for each instrument is because this obviously looks like the scalp you want to get out. This is the area I said that you'd see buyers, but see, it's commingled now with the pounds. So now I would say, okay, close all profits, and I put this on a hotkey. I wonder if it's still connected. No, so I would just double click that. Close all profits. The problem is it's going to, now I'm only up 17 cents. Is the British pound really moving in sync? This is where people get all fucked up. Kind of, not really. Now, this isn't as strict a trading as one currency per platform, per account. So you can really take advantage of the scalp and realize that, you know, those sellers are going to come in where the bottom dropped out. So we pierced through that round, and I'm just going to get out. So I was kind of screwed up. I would have got out right there. I'm just going to take all profits, lighten up all the margin on that one. Now re-enter. And this is where it's a little more easy to predict, because you can say, well, you know what? We could probably retest, right? We've seen that a million times. And I can put scalp-orientated stuff in here. I'll buy new lows. So you can keep on repeating this and playing the bounce all the way down. It's definitely a lot of work, because maybe it will go up after all, but you can see the party was over there. If you look at the 15, the 5, it came back up into the floor here. The sellers are already coming back in now. And here you would buy on these fresh lows down here. We can still crush down. British pound is still tanking, see? So you really had to, these are not moving in sync with each other. That's here we're at the top of the thing here, and the pound's already just getting its ass kicked, right? We're coming off the tops here. Still haven't got into this dense order pack. So if you want to get really crazy here to see what happens, I'm not saying this is going to make money, but you want to see what, okay, so huge fill here. Look at them crush down. You want to see how much it takes to make money here. Here's some bad ratios, but this British pound, man, it's vicious. Look at it. Look at the 5-minute chart there. It bounced off that round. Look at this wick here. You got to cash out. That party's over there. You really got to. You got to. So if you want to put in, this is 40 pips deep to here. Still coming back into this haul. Really start buying here at this new low on that 4-hour. Really buy heavy underneath that. Then when you take this down, it's going to look like one order. When you put all these orders on here, it's hard to move the chart because it's actually graphically or loaded or something. You got to be on your toes. So, 4-hour chart, I'm at maximum zoom out. So people that are looking at a chart like this, I mean, I don't know how they can do it. Like, see now, my orders look like insane here. How you doing that? To the daily. Doesn't look so bad here. You're buying this previous top. You're buying the top back here. Huge density of orders there. 8 hours, you know. You're giving it a time limit expiration too. It's like options trading, really. You're giving it a time to get there. You're trading. It's like the opposite of an option. Like if you buy a call, it's different than if you write a call. If you write a call, it's a naked, brutally dangerous way to trade. If you buy a call, you're just waiting to lose the premium, the expiration. Whereas that other thing could just usually you would have, if you were long the stock market, you could, anybody that buys stocks and doesn't want to short, you just write a call against your position. So you can hedge. You don't have to get out of your stocks. Or just collect the premium when it decays. Especially when the market goes sideways, you would just start writing puts and calls and let that be your kind of passive income on a holding position you don't want to get out of. Like say you inherited stock, you could always open an account and trade against it and just you're in the position. So if you ever had to cover that, you'd realize you're winning on the real instrument, but you're going into a derivative, which it's so funny, people make bad names about, well, derivatives are bad. They got rid of derivatives. It's so funny. I mean, the market crashes and they have these mortgage-backed securities that go bad, and people can't realize that's a fucking market. What do you think happened when they depegged the Swiss franc, for God's sake? Did anybody feel safe in that up to that point? With their Swiss bank accounts? I mean, that's like gold. I mean, this is, come on. So it's just people don't like markets. They like them, but they don't market. Like this one guy today, that guy was, can't remember his name. Anton something from that Millionaire movie. Make a Millionaire. What a goof. What a complete goof. I mean, that guy just, no trading. He's just an investor. Oh, if you do this, oh my God, man. You're trading with like $1 million. Yeah, how can you fuck that up? It's, if you're not starting with $1 million, you're starting with $100 or $1,000. You have to out-trade these guys. And these guys are so big that, they're like, we're up 5%. They were trying to make 5%, I swear to God. You should be able to do better than 5%. So look, I'm in this giant position now. 148 of margin. I assume I'm getting filled here. So this is why we had to get out of that euro. See, now we're getting back in. It's going lower. We're just going to keep buying new lows here. And how much can you afford, really? It's like how much you can afford. This will always be the better trade, is to buy low. Now, if I was buying at the market, it's like, isn't it an uptrend? Yeah. So the 5-minute trader, you dumped up here. They went short. Now they're going long. They just made a new low. And I bought that whole kickback stream. But when it gets to here, I'm going to have to take all profits key, because they're probably going to retest again. Because in the 5-minute chart, it's going to look like this all day long. So you have to accept that fact, if you're a scalper, that it's really just, you got to get it while you can. The swing trader is going to maybe hold through this, and maybe that will end up being the amazing rally into the abyss on the north side. Also, time of, this is a big deal here in the next hour. You're in an uptrend. This is a pullback to the previous top. You traded the bounce off. We traded the bounce off that. Now we're going to try to buy in this huge plunge area. You're really in the body of a 4-hour doji here. So if you go to the 4-hour, this flat spot, it's a 1-hour doji, right? Probably a 2-hour doji, actually, because it's pulled back here for a little bit. But that zag there, support area. Okay, we could make a profit here in about 7 minutes, because the bottom of the hour kicks in. Let's go to the half-hour chart. You can see the climax right now in the sell-off on the half-hour. It looks like a killer buy, right? For a plunge trade. So let's just take a break. Straight down, half-hour here at British Pound. We've filled all these tickets. Catching a falling knife here. And we could still go lower. If you got enough money, you're buying all that. Same thing here with the euro. Major pullback. Cuts into this top. You're up on the trade on these this wick down here. 5-minute chart tells a different story. I'm at 1291, 12,091. Now I'm losing. I'm losing in the pound. So if I run everything side by side here, I can see the, if I put everybody on the 5-minute chart, go for maximum zoom out, see what's going on, stretch this over. I think I ran out of real estate. And that's it's a vertical system. I'm going to delete all this stuff. I think I still got that key running. I'm going to delete all keys. Here is the 5-minute. Everybody's on the 5. Do a total zoom out on the 5. So let's get to a point where we can see where we're at in the 5-minute rhythm there. You don't want to scrunch it out so far you can't see a top-bottom thing. Okay, these guys are retracing back into the floor. And if this makes it back to the round, we maybe be up on the trade down like $10 there, $11. Well, so we're holding $148 in margin. So we're going to sit in this drama for a while. And my math's not too good. I don't know what this is. I guess we have to get to $200 margin to get to a 100K. So I guess we're in like 70K right now. I guess 72K maybe. That's so. Here's the waiting game. Now, in 1 hour, we could totally be up on the 5-minute charts on the euro in the middle and the pound on the right. And these are all underwater. No buy stops pending, I think. So if you're sticking to limits, at least you know what's going on. I don't have any sell limits until you get way up here in the nosebleed. So if you trade both sides towards the middle. Now we wait for 1 more minute, 5-minute. So this is double bottom. You wanted to buy down there, regardless. That's why you place the order in advance, because you don't know. You may not even get filled on this double bottom. You could just see this bottom here. So you want to buy here on this bottom and lower. So you always have to buy lower. Here's a zoomed in view 5-minute chart. Looks like we could go lower on here, and this one would maybe make up the difference. It's very hard to trade accurately 3 currencies, but I'm just showing for, maybe you don't mind the, you're diversifying, so you're not getting this focused. If you're scalping it, probably not the best idea. If you're swing trading, maybe you do want to have the whole thing play out, because God knows what could possibly happen, right? And if you have diversification in which tickets you place and all that, then, in the end, you can make money. But every day's different. But a fast move doesn't last long, up or down. They typically are just really too quick to last. Here go the 15-minute. As you're about to update you're 10 minutes from updating the 15-minute. So if you're looking for a breakout or low ATR to get involved in the, here's buy stops would start to get triggers. The bears would start to get their money management things picked up here. And even here, you could put on a hedge. So when you get a small bar like here, you could put on a hedge or you could buy on stops. The logical thing to do is put up buy limits down here, right, at previous areas, just for the scalp, if nothing but for the scalp, and then you can come back and do more elaborate stuff. Okay, they're killing me here. Now they're filling more. We're going to probably go down to the pound more. So we'll get to about 100K here. When we get to, look, I'm just picking up here. About 78K now. Down $28. Still got my $12,000 as my kids' college fund right here. They'll be going to community college. That's all right. It's good for them. Chicks are a little more loose there. It's not about the education. It's about the socialization. He'll have to get educated later when he's living under a bridge. Living in a van down by the river. Okay, waiting for this crush. Look at this. Oh, just love when that comes in. Now we're in 100K. I think. $2, 1K. Just over 100K. Pure limits, no market orders, no stops. I mean, no stop entries. Now, the heartbreaker is going to be when I start getting out of stuff because I really want to load the wagon on this pullback. The 4 hour says that we should be buying down here, that we're in prematurely, but that wouldn't be unusual. Now, so there's a balance point between getting in too close to the market. You can see here that the ultimate entry is going to be down at this starting gate. So and we have quite a bit of commitment here. I mean, exposure to possible fillage. Here, we're going to buy this top, which is really just this. Here's the doji right here. But this area right here is the crush zone. So we're kind of hanging on by a thread. Down $36. And let's come back here in 1 hour. This is the dollar yen now. I'm just going to scalp it because it's really just kind of choppy. The sellers are going to come in here so we could put all our orders here and they could last all week because we know that's going to be a high probability reversal zone up here. There's a doji. Once it fills that vacuum, you could put these up and they could last all week up here, but they don't. This is like 8 hours. But so if you're going to start selling new highs here for the scalp and just sell all the way up, really, just deal with it. It's always going to be better to put more orders higher. So I'm just really going to crank this account. Here you were still waiting to get filled. Here you're still waiting for possibly another crush. So I'll come back here and top of the hour, see where we're at. And here's another thing. Instead of deleting the order, you can go inside of your tools. And you have to turn this on because it's not the default. But if you go to the trades, no, the charts, and you have to click on this. Well, this is if you want to see the trade levels. And this means that you have to hold down the Alt key to move the entries or the take profits. And if you don't have this clicked on, if you draw a trend line and move it, you accidentally can move your orders around. So with that turned on, I could hold down the Alt key and I could move the whole ticket. Now here I think I'm just moving the stop. And there's a danger in that too because now you just kind of screwed up that. You'd have to see the order move with it. The stop would move along with it. I don't see where I'm able to grab it. Yeah, I'm just moving the take profit. But it would look like this, or you grab onto this and you'd see the whole thing move with it. I guess I'm too deep on the... See if we get down here and get a single ticket to move. See now the stop's moving along at the bottom there. So you can see your ratio, like if you wanted to scooch this up and say, oh, instead of dropping a new one, I want to move this up into here. But you've just kind of destroyed the original plan. A little bit, not destroyed it. Here's the 5-minute British pound coming into the top of the hour, and we bought into this thing. We're in 150K now. We're down $80. I haven't gotten stopped at anything, I don't think. A couple things. This is why if you have the wide stop in there, if I have the risk 20 to make 10s here, I will cash out on that, and that position happens to be pretty big, which is probably about 50K. I just padded the account for one more possible plunge. So if you don't know when the market's going to stop plunging, and you're going to trade bounces, or you're going to trade a swing now, and you can see all the pressure building up on the top here. There's a huge vacuum now. You can see all these stops that haven't been triggered. Here's a money management stop. It's triggered back up into this. And here it's stacking up. But if you do have buy, the reason why buy stops suck is that if they're sitting here, here, and here now they're to your detriment, because you're going to come back and you'll be trapped on that, because it's going to go like this. It's going to go like this. I mean, how do you think it's going to back out of this hole, right? It's going to do it in segments. You think it's going to go like straight up, right? But it didn't go straight down either. So if you had sell stops here, they were trapping you, and you had too close, they trapped you, and you never really got the full benefit of this, if you call that a trend. It looks like a shear your head off move on the 5 minutes. So there's a trend living inside of this 1 hour. 1 hour bar has a whole beautiful trend inside. But we're buying this because we bought new lows here. Now, we'll be underwater here for a while, but if you're underwater in a gradual manner, what does it matter? If you start putting a denser pack in here, now you're getting in, which makes total sense to get in. So as you come into the huge pocket, now for these Gartley people, this is what they call the X, or this is what they call the other, but that zone starts here. This is a Gartley setup, obviously. All they're doing is buying a pullback. They're just buying a wick. But they're making the mistake of buying at one price with some Fibonacci nonsense. You have to start buying here, and you have to commit all the way to here. You need enough money to cover that situation, because it could be like this, and in the end of that thing, it's up here. And if you got all these orders placed properly, in such a manner that, and you're actually watching the thing a little bit, right? If I'm up 500, if I'm up $300 using $300 of margin, I get out typically, because that's really good that you're 501 leverage, and you're using $300 of margin, and you just made $300. I mean, does it get any better than that? I mean, you literally just put down 300. You got back your whole original, what you actually needed to even have up front. You could never get that in the real world. You could never come up with 150 grand for 3 hours. It'd be a drug deal at that point, right? So here you can just do that. And imagine you loaded up really heavy here on buy limits because you knew there was possible kickback coming. And at the end of 4 hours, 1 hour, this is a 1 hour chart. At the end of 1 hour, you pull the trigger. Plus, you can see here, this is supposed to be resistance. It just crushed through, come back. Obviously, this double top is going to be the ultimate of ultimate buy zones for sleeper sellers down here, that sleeping buy limits that maybe they last all week. If you put them in every pip, or you put them in every 4.5 pips, it's a endless possibility of how you'd stack them up to really squeeze the most amount of risk out of that. Look at the 5 minute chart, still going down. Probably still going to crush. So here's where it's going to determine whether or not we're going to take in another $100 of margin, another 50 K here. And so are we going to get a retrace? As the top of the hour is coming, it's non-stop on the half hour, non-stop on the 1 hour, coming near the 20-yard line. But really, it's really going to kick in here. So here's where the scary part is. Now you start buying more here, and you're looking to see how much margin you've got. So it really doesn't take long to blow up an account. If I come in here and just put it just outside that and starting at that. I'm not looking at the cash out ratio there. It's going to be, I'm going to put some bad orders in. just to pay for the punishment of going down there. Euro is crashing lightly, but here's where it really starts to get, as like I said, interesting. Is I want to see the reaction here and I want to buy it. Same thing on these wicks, same on these, and here I put them in denser, more focused tickets as it gets down here. And you're gonna have to reload that. If it bounces off that, we could still reload it down $100. Huge crush here coming at the top of the hour. Coming all the way back to these, we're buying all new lows down here. It's fresh real estate down here. This should be pretty vicious. Here's the doji, this little bounce spot here. So you put a more focused order bank there. And then right at the wicks. So it'll really load up. Okay, it's getting scary now. They're starting to fill me. All right, here we go. Catch a flying knife. And this is the ultimate. If they could get to here, they'll find a lot of fresh territory. And I'm going to get in to make 10 pips down here with a 20 pip stop. Here it's going to be 5 pip range to make 40 pips. So here's the swing trades come down in here. Okay, taking some punishment, $150 down, almost 350 margin there. Get to about 2 standard lots here pretty quick. As this crushes down in. Okay, here we go. Yeah. You can take some heat here. I think we'd be down about $500 here for a moment. Could be. I like to try to guess. Now, I think it'd be down about $300 max, and there goes the kids' college fund. Well, there's no shame in washing cars, man. I've had them cut all the lawns in the neighborhood. Don't they have a laser cutting lawns yet? When the lawn laser's coming? So we're patiently waiting to, and the sellers would be cashing out as it plunges into this. There wasn't a chance to get on this train unless you were on the 5-minute. Now you look at the 5-minute, and you're like, wow, geez. So see, you had to get the hell out there, and you would not even got filled there. If you try, it's pretty dicey. You have to be quick on the draw, because when they come down to new lows, another 20 pips here, and we could get a nice look at how close we are to the super fill zone. So it's obvious where the stops are. The real crazy stops start here. So maybe you want to buy all night long here. I used to do that all the time. Just be like, I'm buying this all night long. I am so stubborn. I will buy this all night long. So this is like a kind of a gimme trade here. Okay, we just clipped into this pocket on the British pound near the top of the hour. Go figure. Look at this wick here, and we just crushed that area, and we just got into 400. So now we're in just over 2 standard lots. Right? I don't know, my math's not too good, but that's the trade. This is the trade I was explaining. And now this is the hard part. Do we dump everything up here? Fuck yes. Because when it comes back to here, so we're getting in, we get scalped to here because we're in too big. We're down 100, and we got stopped out of something and got stopped in because I noticed it's on 130 for a second there, and we picked up more margin, so we handed off into now we're down 130, getting killed again. So that stop has been grabbed, or that level's been probed. So does it hold here, or does it follow through? And this would be the thing for to consider on the 5-minute chart. Is this breakout going to continue for another how long? And look at this perfect trend on the 5 minute. How long do you think this can last? It's like, how perfect can something be? Here's the ultimate four banger on the clock. You got to wonder, can that go down further? Probably still could. You could build the channel off of this 5 minute. If you double click this and then hold down the control key, you can copy that over and just build an instant channel. So you can really just, if you don't want to trade, you can just analyze, and your orders are sitting there waiting to just fill the obvious apex of the pullback. And since I'm not going to buy on market orders or stop orders, it's actually less work to trade like this because you're just planning areas in advance. It'd be very difficult to say, oh, I'm going to keep buying as it goes down. I mean, you could be loading up on this at the market below the round and you're 20 pips under the round and you've loaded the whole wagon here because you wanted to pull the trigger, or you just placed a bed of traps and you're just going to go, you know, I'd buy down there anyways. Or you want to be the confirmation person and you're running trailing buy stops and you keep punching the key. I've done this. You got a hotkey set to buy stop, X pips above. As the market's dropping, you just keep hitting this buy stop key. The key lasts 15 minutes, half hour, 1 hour, 4 hours. The longer it lasts, the worse it is because now it's going to be a trap as it's coming back. It's a trap on the way back, and this is, I mean, if you've already got in so heavy like this, you're in this big, you need to not add on anything. You can't pyramid into something. You just can't. I can't. Because I feel like I'm chasing at that point. And I'd rather project into a target. I'd rather make, somebody has a target, well, that would just might be my, or somebody has a stop, and that looks like a good place to get in, anywhere to get in. It really wouldn't matter in the end. It would seem like that when you, in hindsight, you'd say, well, yeah, see, but it's pretty tough to size the entry because the idea of trading the wick and being in the trade at the beginning of a hammer and out at the end of a hammer and cleaning up on that giant psychotic move entails waiting for that thing to go through the swing, of course. And that might be grueling. And the thing is, you know, believing that it's even possible. Or markets behave like that. If this is a 1 hour chart, some people would be say, I could trade that. There's plenty of time to get in these fucking trades. 5 minute chart? My God, man. And this story is more dramatic on the 5 minute, but you want to be aware of the other time frames. You're only trying to make 20 pips. I'm only trying to make it to the round. Back to the round number here. Now, if I get to the account gets up $300 here, I might be tempted to get out, and it's totally okay because you're trying to make money. And when you see $300, grab it because as heavy as I'm trading, I know I can just get back in at least like a 10K with 2 drag and drops. I'd be back in a 10K, no problem. I'd be back in trouble again. It's easy to get back in trouble. Getting in trouble is so easy to do in the market if you call trouble being losing. If you get in arbitrarily and you find yourself in a losing trade, to manage your way out of it is the ultimate skill because you can just put yourself in a losing trade. Like just go to the bar and find some psycho babe. And then just be like, how am I going to manage out of this? And it's like, I'm just going to buy a disposable phone for this one. And then you have to say, well, you know, just don't let them follow you home. And whatever turns out to be right. So you always have to have yourself a escape hatch, or stop and reverse. Or some people are gonna. I like the guys that say, "Well, I'm waiting for it to really go up before I'm convinced that we're gonna go up," and that they just find that to be disturbing. Because I'm a contrarian, so I'm just like, if it's going up, fuck, let's sell. But how do you get in these things matters too, because if you get in too much confirmation, it's going to be too much chasing, and too much daring the market with limits is going to be too much exposure. Trading at the market may be might bring out the slot machine mentality in your head. You might think that you're, really, it's like more slot machine-ish. Although you have a little bit better odds because you get the rhythm of the slot machine payoff down. But yeah, it's. I've never had more fun in my life trading this shit. I don't know. I don't have any other skill set left, other than anger and just making stuff up. But yeah, this trading thing, it's just it's funny because you can make a lot of money in a burst in one move and think, man, this is easy, but actually it is easy. And the thing is that if you're okay with making 10, 20 pips, it's okay. There's no shame like, oh, I don't make 100 pips, but dude, if you're in like 200K and you just made $300, you're doing all right. I mean, 200. You have to be trading high leverage. Otherwise, if you're trading really big, I don't get it. Like if you have $1 million to trade and you're trying to make, I don't know, are you really eating through your $1 million? Like, how are you living that you don't have $1 million a pile of $1 million? Maybe you have $1 billion and make more. At that point, I would trade bigger on the tickets. Because you probably wouldn't be able to exit all of those tickets and make money. If you hit a take off profit, you probably wouldn't make money on that. You wouldn't get out in time to really. There's a balance point between all that execution, and I suppose if you were really good at the, it depends on how close you are to the server, I suppose, right? You could have a button you press and it gets into the market super hairy. You could have done it down there at the bottom. I could have a buy at the market, but it's no guaranteed execution because those are double click orders. It's better to place stops and limits because you're really going along with the, if it doesn't drop on these, then all brokers will accept these drops. Because they're passive in a way. It's waiting to see if that price is available and then it drops, and if it isn't, because it says drop on chart, it's not the same as a double click. A double click inside the T folder that's in the zip file inside the data folder, that is going to have stuff in there that is so fucking out of your mind, where it's putting in stops and limited a fixed thing, and the take profits is all spelled out. And if you don't have those numbers perfect, you're going to freeze the system for 10 seconds, which may seem like a short time, but if you're really trading big, that's a lot of time, especially if you're going 100 miles an hour and all of a sudden there's a dead body on your windshield, you can't see for 10 seconds. You've just gone like a half a mile, right? If you're going really fast, you just went a half a mile, so it would definitely be a factor. Psychologically, you might actually miss out on quite a bit of money. If you've ever traded that big, you're up in, it's like 30 seconds, so another $250, you're out. You just go flat because you realize that it is such flash crash and flash. I mean, you can have the market literally, especially Monday night here coming into the opening. This, you can make 10, 20 pips on a Sunday night, probably, or lose 10, 20 pips. And maybe you can make 50. It depends what's really going on, But here I would have got out already here, I think. If this was real money, I would have tempted to get out in the next bottom of the hour. Because this sellers already came in here. You see this double wick up here, this double top. See, they sold into that. That was uncharted water. A lot of people buying and selling right there. Big turning point right on a shaved candle in the 5-minute, coming back down now, running out of momentum. Certainly breakout. It could still retest. If you've ever drawn trend lines on space, so you're actually projecting a possible retest on trend line. All the projections you could possibly make at this point, as you turn the corner, it's going to go in a spiral. If you connect every mountaintop to every valley, in the valleys, if you connect the valleys, you're going to get this spiral effect, right? Starts to turn. You're looking for support on here now. You're projecting that it's going to come down into here. We could still pull back. I'm not adding, and it's a good thing I didn't have buy stops on here. This is why you don't have buy stops at this point on the top of this candle, because you're already in too heavy. You'd have to make that determination yourself of how big you want to trade. And here you need at least probably to have $2,000 in the account to trade like this. But if your stops are so tight that they're going to take you out and you're going to have enough money left over. So what people call get rich quick, it depends what you define as rich, because you can get rich quick if you're trying to make $50. If you think that's rich, which it is if you just made it in like 40 milliseconds or 5 minutes. If you made $50 in 5 minutes, if you did that by hour, you extrapolate that and do the old cheat statistics where you tell people, oh, this is going to be, I figured out per day. Yeah, but you're not going to trade 24 hours straight, right? How much money you make per day. This one is. So, and here, once again, we could retest again. And if I have just enough money for what I'm in now, and I got money for these other pendings, and there's a master stop on this whole bank that is so deep that I can afford this whole trade, then you're talking, right? And letting this whole thing play out at this point. So you can see how trapped you could have got had you got excited about this bounce off of here. You bought here, and you bought a little bit right now, and we can still drop lower. And you may be waiting for 5 minutes to go by here, and you're going to lock in at this double bottom, or you got buy limits again here. So you could have dumped the whole thing if your broker was fast enough, and then you could reload it like this on limits. I could still put more limits in here. Now I maybe put a tighter stop. The market's dying down now. And I just load up right here at a retest of the time bottom, which is this valley down here. And as you approach the bottom of the hour, maybe it is going to smack into this thing, and I just want to put a huge, ridiculous bunch of like 10 pip stops to make 20 pips down here. Okay, so they're coming back into this. I can add to the position at a lower price. I would do that, but I certainly wouldn't be adding to the position with the excitement of this first bounce there. I would feel that's kind of a trap. Here I'm still long so big. Okay, I added something slightly here, I guess. Or the euro's dropping. Okay, the euro's filling the ultimate window right now. Everything I put in on this thing, and we just smacked into that wick because I just saw my margin jump. Look at him cut this thing through. And cut that back. Here it doesn't take out the 4-hour wick, but if you look at this is actually more important. This is the double ledge. Here's the wick, and this is the ledge, and there's even to here we could come. So I'd really load up right in here. If you don't want to duplicate the order, just weave it in between. Put it like this. But that's set and forget it. 8 hours, you can take a big nap now. You can go get hammered right now. That's a no-brainer trade there. So the 1 hour British pound, here's the 5 minutes. So we got filled on maybe a retest here. No, I think we were getting filled on the euro this last minute. That's why I picked up another chunk. So I guess I'm in, was that 250,000? So it's 2.5 standard lots there. Coming up into now that as soon as we cut through the top of that, I'd cash out right into the bottom of this. So this is obvious scalper's exit is the last known low on the 5 minute. It has to be. And if it cuts through this, it'll be very quick and dirty and may even take this out. This is where people get into dreamland. For us to get to here, it's going to be harder than you think because, we got to cut. First we got to take out these wicks and go with such momentum there. But it is coming up to the critical It's like 10:30 in, right now it's 10:12 in Japan. So if you flip to the 15, nice thing about the 15 to the 5, the trend lines on time will stay together. That's the 5-minute downtrend. This would be the beginning of Elliott wave here. This would be 0 is the hammer. This would be 1, 2, 3 is supposed to take you to here, but we could still get a cutback. So that's quite a violent pullback momentarily, and based on what time it is. We have our first chance to draw an uptrend line too. If it closes, if in quarter after hour, if it closes up here, this is going to be a legit trend line. It still is in a way. This would be the beginning of an up channel in time if you hung your top off of this. So you could kind of speculate a channel possibly coming up that we're going to drift up now. So you're kind of like building it around what's happening. It's like when you go sailing a boat, okay, you can't choose the wind, so you have to adjust the sails in your boat to get the most efficiency out of sailing. It's called tacking. It's you have to keep on getting this great angle to come in at, and you're going to ride the wind, the wave. So you don't have a choice there. You can't set your sails to what you want to have the wind be, and the market's the wind. And here you're gonna place the how fast you get there is determined how fast, like if you can contour your orders to the wind, you can clean up. But if you get if you have it set up to do the get the maximum and a storm comes in, you have your sails set for maximum capture. Boom, right? You just blew up your capsize, I think. But nobody wants to do that even, right? If you have enough money to lose, you also don't want to have that loser feeling like you just capsized your high-end yacht because you weren't paying attention. So that's no different here, and you have to be aware of the water you're in. So that's the spread, right? The waves. I mean, you can't control where you go take your boat. But anything could have a tsunami. Any instrument you're in could have a complete disaster. So that's a factor, I think. Here's the 15. We've got not enough to draw trend lines on there. So the 5, you're kind of stuck with the 5. If you really want to get the best deal in town, you have to keep updating the trend lines on the 5-minute chart. So here's a realistic view of momentum. We're still going down, but we have our first uptrend line we can draw. We have to destroy that and go through it now. Now you can put sell stops in here. Now this is another problem. Do you get out of everything you're up in this trade on, which I'm actually up on the original entries down here, and I put new orders in here. This is where it's dicey. This is where you need somebody to do the math. I'm still long from the original thing. Should I let this play out till we get a possible crush through to this top, or should I let it go typically. I just go until it's, give it like 2 hours to play out. Okay, wait for the bottom of the hour here. I'm only down $22 now. I'm in pretty deep. And I've been putting some trend lines on here, destroying it as the market unfolds. This is the projection for the bears off of the, if you hang your trend line off the undercarriage of the triangle here, and of course you could hang off every point here actually to get the most greediest projection would be like this. These two valleys connected, projected down. The more shallow projections are from this, right at the round, right through here. Now this is where this is supposed to become resistance on the way back. But see this is the apex of the spiral right here. So it's kind of like they look like Gann fans and stuff. But that's all the market's doing. The market's its own Gann fan. Or it's a fan of Gann. But here's the double top projection. This is the channel that people are like, well, hell, it gets up there, they're selling, right? But you want to, I want to be buying into their sell and into my sell. So if I'm going to sell up here in a focused, I don't have like a scalp ticket here. Let's see, here's a scalp ticket, 20 to make that. That would be up here now to go the other way. Let's see, like a broader, here 12 pips stop to make 18 pips up here. When it comes back up here, people are going to sell, right? So you put starting right here at this wick and sell all these new wicks up here like this. Now that's going to make sense in about maybe 8 hours, right? Comes up there, smashes that, comes flying back. I could sum up a whole $40 here. If I wait till the bottom of the hour, I could get an amazing bounce into this target. So the floor is the target. We're hitting the first target here, which is the last known floor on the 5-minute, last known valley on the 5-minute. We just cut through it. So this is the next floor target. So I want to see my margin go down to 400, but I don't think it would. Some of these are 10 pip winners though. So here's where it's going to come in handy to have the 10 pip winners, because you can you can unload something. We could always see it go lower and buy another new low and get that new fresh low. So I'm going to delete all this shit and start over. Like I said, that's clean slate, and all that was just living in your head. Now, this top bottom does exist here. This was tonight's entry on the dollar yen, was to put buy limits here. See all that beautiful entry. If you look at the 1 hour, you see they just kept on taking it and retesting. It's a very popular price there, double bottom, right near that round. Never hit the round, but it's not really. It's not that the market's attracted to a round number. It's just it's easy to do the math on round numbers. It hits a round number just as randomly as it hits a fib handle. It's just easy to do math on 50 pips and 100 pips. And you'll see it bounce. Like here's the 50-yard line. So I have a 50 grid here. On this platform, I have the 100 in bold and the 50 is light, and I got 20 pip handles, which means this is a 5 pip window around the 50. So if you scrunch this so it's 20 pips solid on that grid, you've got a 5 pip window around the 50 there. But it's not really about that. It's about the fact that we're at the 50, right? But we're right in the middle of the top of this, about to bust up. We're going to go up now. Right? We're going to tip over the scales, possibly go up. So if we go up, I want to sell. I want to sell up into this doji here. So I'll put a dense order pack up there, and right there where there's that stop. And maybe I can't sell until we get to this round number here. And you could go to sleep here 8 hours, right? Just put these in and come back, see what happens. Can't get it too big though. If you don't want to buy here and ride it up into that, which I typically don't like to do because it's not going to be a straight line up there. So I almost rather trade the reversal. For something pending where I'd be sleeping reversal. A reversal I wouldn't be able to pull the trigger on. I wouldn't be able to be there for that or be putting in sell stops as it comes up, flying up there, or coming underneath the market with sell stops on a violent move. See, here's a non-directional entry that if you were to just put really close orders in here, buy stops and sell stops, you would have cleaned up. If you had targets that were, 50, 100, 150, 200 pips. There's 200 pips down in here, but this window of entry here is probably the quickest, dirtiest money you ever made in this whole chart, other than this one down here. So this violet move, double bottom, rip up, didn't quite make it to here, but this is with the ultimate goal for these people to hold it to. But there'll be so many traps and pullbacks on the way there. It may not look exactly like this trap playback, or this kind of like choppiness, just call it choppy water. But that's the problem, your sales are set to make money off of this. Next thing, here comes a storm. You have to be able to wake up, get to the rigging, and change the whole scheme. So that makes you have to be a dynamic trader. Like, in other words, you have to be involved on some level and have maybe you have an alarm that goes off, or electric shock collar you wear that's hooked up to the platform. Whatever you need to get you, maybe it's you hooked up, just try to get you but if you have a double click button, which like I said are risky, and it just throws in a blanket, you can probably launch that. If you do it right, it's not going to crash. But if you run out of, if your broker has a limit of how many orders you can drop, then you're going to see the problem that's going to show up in terms of they don't take any more orders. Like, you'll find out the limit of your broker on a demo. And if you're crashing demos, it doesn't give you a lot of confidence to take it to live. So the demo is also going to let you see the worst. You always want to run a demo while you're running a live account, because if you're going to add on to any trade, if you're going to make new trade plans, you need to know that they actually would launch, that your scheme isn't so harebrained that it's unexecutable and unaccepted by the broker. You make mistakes on negative or positive numbers, going to make a difference in these things. But for the most part, everything here is launching. You'll be able to tell if it's a bad script by this little icon. It's going to turn different color, slightly different look to it. These look like they run. But yeah, that's about it. Now I'm up $86 here, and I got out of something. So look at that. Now look at the fill here on the trap, and if we cash out into this floor here, I would say I would totally go flat on everything right to here. Now you could sell there, but it could only be for a scalp, because it's not going to turn on a dime there and come all the way back. You have to play this game. You can't always play the giant gust of wind game. This was quick and dirty money. Now this is a get rich quick scheme right here. But really, wow, look at this nice, beautiful trap here on the 1 hour. If you're a seller, to get in on limits here, that was totally golden ratio-wise, because maybe you had more sell limits up here. Blammo. And you knew your targets were here. New lows are your targets, because this is the revolving door. So people are going to go the other way. Then they're going to get back to your fair value, and then we could go chops fill for quite a bit of time, and maybe 3 o'clock in the morning, it's up here screaming and it comes flying back to here, and that was the trade. Or it's screaming down here and it comes back to there, and that's you just traded through the wick. Okay, here we come, 9 o'clock now, 9:30 right now, and it's 1 minute into 9:30. So you're in the 1 hour charts, they just updated, and I think the 4 hour updated a half hour ago. So that 4 hours is done for on this one broker, just so happens. And so look at this. We're filled all the way down to here. We had enough money to take it to here. We've cashed out of something. Is it okay to hold this through the swing? I like the idea of coming just at the bottom of this wick is that compiles with this price. This is the same price almost as the bottom of the 4 hour wick. So you don't see that show up. if you zoom out, okay, you can zoom out here. So that's the time support. It's a doji here, and it's a double bottom. So this is a big deal. This low is a double bottom on the half hour. On the 15, it could be a triple bottom. It's double bottom on the 15 with this pivot, these two dojis here. So every time you see a little baby move, it's a doji. Here's a baby move doji. So if I put a support here at the double bottom on the 15, in time is this top. The top's becoming a bottom on the 15 right now. If I go to the half hour, it's hidden inside of this other bottom, but this is, if you put, these are all orders. So this doji, I bracketed the body on the half hour doji there. So you know it's a doji because it's a baby move. And so there's 5 baby moves in here. And now I can go through the time frames and see them all show up. And this would be the top, the bottom that should become a top, and we should go down. If that doesn't happen, then it's going to be one of those, it's going to start engulfing this whole trend line. This would be the first resistance point. And here we've already broke early, but if you wanted to say, well, I'm going to connect these two peaks. Not these big ones, but these two baby ones here. These baby mountains. So that's the hand-drawn momentum, so to speak. Those baby mountains here taken forward. You're about to, you're touching it right now. But this is the floor. This is the most recent floor, and the other markers are from the floor that is back there. This is the 5-minute floor. If you go to the 15, so if we're trapped down here, and this is going to get above, everybody's going to bail at the 12 level, at the big round, triple bottom at the big round. This is the rated channel. We're just screaming down this channel. How long do you think this channel is going to last, too? That's brutal momentum. All we have to do is climb back over this, reject this new low, and it turns out that everybody should have bought down here like crazy, and they should have bought down here like crazy. So we'll hold this until the top of the hour. Maybe we could make money on this. For not wanting to be in the market that long. So we might leave something on the table here, but looking at the 5, we're getting near our exit already. Right near the floor now. So you could go flat here. Take a look at these. This guy's creeping out of its. We're at the sell level, the floor that was taken out, and we're in that gap now. So we've crushed through that gap. And I said if we got to here, it'd be a miracle. This doji, right at the round, 5-minute chart. Here's a bigger doji. So this hesitation here is a bigger one. This would be the next place to cash out. And then the seller should start coming in like mad from this wick up forever tonight. This will be quite the other way it'll go there. Okay, sellers are coming in right now. So they just tipped this. They trapped people on a breakout of that last 5 minutes. And here's where the sellers come in. So we didn't get out anything there. We should have. We were up $100 there. Everybody's trading long, right? But yeah, if you were, had somebody on the British pound, the euro, The euro, see, the same story's going on though. Same cash out point. We're in the same phase. This is looking to rally, but this could be the top. The sellers came in here on this new high in the 4 hour. Even on the 1 hour. People that sell, they want to sell this ledge and this, with this maybe a stop here and a stop here. They want this window to sell, and maybe they're going to cash out here. And then the buyers should be coming in on these, and definitely buyers down in here. And if we ever get down about 300 pips, you're going to buy like mad. That'll pay that. You know, once a week there's a trade that you can make 100 pips swing, right? Well, we've all seen that. You got to wait you got to be in the trade for like 20 hours. But if you want to just, be in that trade for 4 hours, there's some great 4-hour swings. Look at this nonsense. Look at the drama here. This is like 40 pips of insanity going on all day long here. Take a look at this 5. Okay, so the sellers came in and we're pulling back. Can they hold it down? Can they hold the bears' heads underwater? And we didn't get out. We're only up $57 here. We didn't get out either. That was the exit. Sellers came in at that. We'll see if they can push it down. And then this is the deeper. If I was going to buy more, I'd buy right here on this top. And I would buy on this new low here. If I wanted to add, we could still retest, and I don't think I'm in enough. We'd add here too, because we could still get a pullback. If you still like the trade, I'd start buying on this ledge, this new low here. Where's the... I put my zoom key away to get some more space on the chart, so I have to stretch it out. So we'd buy down here, where this would be the stops for the people that have got in the first bounce, the early birds. And the second mouse gets the cheese, so we'll put the cheese orders in down here. So you can still go lower. I think I may have to go through the whole family's savings here for this trade. Nobody's going to get anything. Nobody eats for a week. In my house, nobody eats until Daddy can make enough money trading. Yeah, the kids, Oliver Twist, is it that? Of course, you would expect here is the inverted hammer. Buyers should come in now. The eager buyers would come in now. The guys that want to wait for retest or slightly lower, they're going to have to wait a little bit maybe. I think the next target is going to be to pop through this 10-minute ledge, a 15-minute ledge up into this. And then it's quite a leap until you get to these wicks. I think we still pull back now. So I'm going to add real aggressive. Just buy right into this retest. So the British pound is finding support at this last known top. We got a top bottom in the 5-minute. We're looking to fill up into that blue zone. 5-minute chart is doing the same thing on the euro. Go figure. It's got to reject this thing on close. Quite a nice sweep through this. We cash out. We ride it to the 1200. We're done. We come back later. We're still looking for this to rally. No correlation to anything. Still looking for this to smack up into these sell limits tonight. Got daily orders and 12 hours. I didn't put any 8s or 4s in here. Everything's like 12 hours, 8 hours. Daily. So daily is quite a commitment. I feel like I'm getting married when I put a daily order out there, but I guess I'm planning really far ahead, so to speak. This is what you're doing. You're planning far ahead, but that's okay because it'll always be a good trade. You don't have to wait to see what the candlestick pattern is up there. That's just completely ridiculous. That means that you are saying, I don't trust that that's a good place to sell, so why would you be looking for a candle pattern in a place that you wouldn't sell in the first place? Right? It's like if you know you don't like to be with, you don't have a certain color car you don't want to buy. You don't even shop for that color. You don't see that color. It doesn't occur to you. But it's not like you're going to sit there in the dealership and they're going to whip out a bunch of paint and go, oh, you're sitting there going, yeah, you know what? I'm looking for a blue car. I'll take an orange car. Where's the orange cars? I guess you can only have a high-end car. Orange is just so obnoxious a color. Yellow. Can you get a car that just glows? It's probably illegal. I think they put like a law now. You can't have your car do anything untoward. Your car. It's okay to have a robot car, but just don't have like a, anything. You can't have lights under your car. You can't have nuclear weapons on it. All sorts of rules. Okay, here we go. Looking for some follow through on this retrace. Trying to make $300, I guess. I kind of got pretty overloaded on the buy end of this thing. Pretty fragile trend up here. Just have one more pop through this thing and hit those stops. Going after the bears now. Short squeeze. 15-minute guys are on it now. 15-minute robots. 15-minute stop cleaning. Here's a ledge on the 15. That's a target for the bulls. You're cashing out here on that ledge, on that bar. Those are the lower highs that people are talking about. Now here's a Fibonacci-esque compression. Goes up and it gets tighter and tighter. And the exact wicks. Okay, we're looking for some quick and dirty money now. Top of the hour, want to get flat into this round number. Boom. It's over and said and done. Cashing out here. Sellers will be coming in right at these wicks. This could be a very quick crush through to the round. We could spurt through this because of the top of the hour is coming in this wick here. Once it trips that, you could really fuel quite a smack into this doji. So I try to take back some of the, we're getting out of something along the way here. I see the margin going down. You really want to get the perfect fit on that margin. Here's attempting to get out right here. Coming right up on targets. Fill that last void to the round number. British pound 5 minute. Go to the 5 minute euro. Similar story, not as violent. And here the sellers already came into the doji. So this target's already been met. I would have dumped this thing. If this was on a separate account, I would have just cleared that off and let the other guy go. Big crush, possibly at the top of the hour, 11 o'clock in Japan. Coming up, lunchtime. They call this a sushi rally. I don't know. Here we go, just about to trip this wick. Looking for this margin to drop by at least $50 here or more on this smash up. Then you have the dreaded decision whether or not you're going to close all profits. If you're up 500 and call it a night, go back to business as usual. And you can start throwing buy limits in again. So, or you could leave the ones that you have in there, or you probably want to delete everything and start over. This is where it becomes like, do I let all that stuff hang out there? And sometimes you do, because every time it hits fresh territory, it's going to find willing buyers, willing tickets, and then you can cash that wave, and then it comes back and you cash that wave, and this way you could leave a bank down there, because it's always going to be a good price. It just hasn't cut that wake yet. It hasn't cut into that territory. Here, I'm looking for this quick gust before the top of the hour to just clean through to this round number, because then we get a big backlash, big sell-off, or it barely sells off, and then you could let the rest of it go, and it could turn from a scalp to a swing, but it's all pre-laid out. The swing's a very small position. It's hard to ride the whole giant position, because that bottom area there was an amazing scalp had you put 5 pip targets, which I did not do. So this platform has kind of a, it's kind of greedy in a way. It's saying, yeah, 10 pips. But if you're buying in at 15, if you're buying every so many pips, then it's not so bad, because you got to expect that you're going to make those 10 pips. So here, once again, I put in some bad ratios, but I put in some greedy ones too. So I'd say I'm kind of in a break-even-ish situation. Plus, I have the option here, when I'm really up, that I just hit the take all profits key. If I'm up 1,000 or 500, literally, if I'm up at the top of the hour, if I'm up 500, I would just go flat. Just get out. I mean, I wouldn't go flat, but I'd probably get out all the winners. And if you left behind, starting $500 of margin, so it's a 2.5 standard lots, and I end up with in a 20K. That's something maybe you could let drift. Now that's going to annoy the fuck out of you, and you might just want to go totally flat, because to focus on 20K after you just scalped 200.5K may be as annoying as being in a trend trade that just keeps swinging around on you. So you'd be surprised what could annoy you later on that didn't annoy you at first. Here, obviously, the sellers are coming in right here. See that? They went 1/10 of a pip higher than that wick, and the sellers just came in. So at $175, depending if I was up 300 right now, or do I wait to the top of the hour? So that would be the hardest part. Getting in, kind of easy in a way. Certainly, getting in is guaranteed if you pull the trigger at the market. And if you bought this thing, every half hour it dropped if you're going to trade as time passes by, you would have gotten in, it's down here, but maybe you don't want to buy, you want to buy when it makes new lows. So you would have bought here at the end of half hour and here. You're in a 2K. You're up on this trade because you literally bought, presupposing you limited your buying to, if it closes under here, I will buy at the market, and you bought this, and you bought this, and you stop buying here because market traders don't buy when it's going up. They're chasing it, right? You want to put a buy limit down here now. You could have sold here. When the volatility kicks up, here maybe you are buying a little bit here because it's not screaming up. But if it went screaming up, it's too late, right? You're getting trapped. It was screaming down every half hour. You can be like aggressive buy, and you've got limits here too. Say you had 5 limits and you bought at the market whatever you could afford, because realize that here's where you're kind of tempting fate. You're daring the market. You say, I'm buying here. Fuck these bears, and I'm buying here and fuck them. But if they took it down a little bit lower and you had limits down here and you committed to a limit grid here also, and you just bought here because of your ego, and now it's coming back, and if these were like only looking to make 8 pips, and you also had the same 8 pip winners down here, it gets very complex real quick. I mean, you can have risk 5 to make 8, but they have to be in a dense pack down here. I do have, well, I don't have any, but you have these tight orders, you know. And waiting for the top of the hour still here. So it's very grueling. If you're in really big, you just want this to be over. And you want to take your $500 and run. You can even make $1,000 on here if you play it right. So on the 1 hour, if you got in here really dense, and I didn't have my target set, and I didn't put enough dense orders in with really tight stops and really tight, because then you're going to spend money on spread and commission to get the to make it worth its while down there. So I could have really got in quite heavily here on the tip of that wick right there. I am in from down there, but not heavy enough. See, I got filled down there, but I really should have had a target, so I should be out of like 500K right here. If I was out of 500K right here, I could just think, oh, well, this is nothing. And I could ride that back up into this bottom. Okay, 5 minutes. Here we're looking, we had a pullback. You could have bought at the market 5 minutes ago. Now we're looking for that gust of wind to cut us through this void. Top of the hour. Smacks up into this thing. Spikes up. Cash out. We're good. Same story in the euro. Pullback slight. And for the euro, the contest is to make it into this pool of this void. Start cutting that. Got to take out the high of the last 5 minutes. And there's a ledge up in here. Pop into this. The ultimate resistance is going to be up there where the bottom dropped out. Still waiting for the top of the hour. This is drifting up. This would be your classic so-called perfect setup, but you've really got to sit there and babysit it and pull the trigger there. Like this 5 minute pullback, you got to be there for it. Top becomes the bottom. Otherwise, you're just riding it. You never saw it. On the 15, you can't see it. It's nothing on the 15. You can't find a place to board the train on the 15. There's no justification to buy low. This is buying low. So is this, and so was that last little drift. But this could be over now. On the half hour, you've only got one. You haven't even completed this. So this is the first rally, the first chance to get short for the bears on the 1 hour too. So it's up the down staircase. You know, somebody's going up this. Which one's had the most amount of shock that we've just experienced? You'll see the most amount of healing come back to fair value. Okay, here's the void. We're going to try to jump here. On the 5, coming back to the floor. This is caught in a trap, so I'm going to buy this up down here if we retest back into this top. Okay, looking for that. Got 2 minutes till top of the hour. Okay, the euro's starting to go. The euro's on its way. Here comes the pound bringing up the rear. So we'll get cash out of something here. And I'm going to, at 5 minutes after the top of the hour, we can still get follow through, and I'll just get out of the whole thing, just go flat. It'll be a scalp for me. I just like scalping. I want to ride this thing. I mean, the retest could just be brutal, and you don't want to have to ride that retest. Nobody should be retested. It's like, you're testing me. And then you get testy. People retest you too much, and next thing you know, you're angry. 170. I got to get to $300 maybe. If I'm lucky here in the next 1 minute, 6 minutes, because after the top of the hour, if we could follow through for 5 more minutes and make it to this, then you could just nail the take all profits key. So come down here, get my finger on that. I'm just gonna. So I built it. I'm gonna dump it. And I can also close all the open and pendings at this point. At the end of this, it's really a swing trade on a small time frame. It's like a 5-minute swing trade. And you just have to, okay, you got 30 seconds supposedly. And the euro, I mean, the euro should be leading. The euro's leading and the pound's playing catch up. And I just got out of something automatically. I just reduced my margin automatically there a little bit. 10 seconds. The pound's going to try to play catch up. Here's the euro. Euro is just sellers are coming in now. Sellers come in. Euro hasn't crushed through yet, but that's it. See how the top of the hour? I think it's turning on a dime right now. I got out of something. The question is the math good enough for me to let the rest of it go for another 5 minutes? Look how everybody just dumped right there at the top of that hour. Classic. Plus they just nicked this. This is where the sellers would come in, right on top of that ledge. So on the 15-minute chart, this would be the first pullback on the 15. Definitely the ride's over. So you can't get a lot out of these markets. Now you have to be willing to either add or hold on to the original thing and wait for this whole ride back. The 15's forming a triangle right now. And we could still get, it's not over till it's over, right? And we still have 4 minutes left. We still get a pop-up. Especially for the people that are short, they're going to be double thinking their short position. And the sellers come in here on this sell stop on the 5 minute. Their robots just went short on stops for those people. And the buy limit guys are buying that also. This is high activity trade window. This is where the reversals take place right here, because the stops are being triggered and people are going in buying their stops off them. So one more moment of truth here is the 5 minutes after the top of the hour. Then you're going to be thinking, what about the bottom of the hour? And this is where you would just hold on to the trade and wait till you hit this round number. So we're trying to get to the round here, and we're trying to get to the round here. Both round number targets. It's not that it's a perfect, it could be a 20 pip target. It's just where the floor come up. The floor was taken out. There's nothing magical about the 100 pip. It just so happens that here, it's a doji and it's this bottom thing. So we're going to let it ride. We're cutting new highs here. We're getting follow through. Like I said, 5 minutes after the top of the hour, still got another 5 minutes of psychosis. We could come smacking up to here. It's totally here. Look at this pullback. See, now here you have to say, well, I love this trade. Let me buy some more. So put the buy limits here, right where the wicks are. Load this up. But look at the sellers come in there. But this was the leader of the pack, so this guy's playing catch up. Now they're out of sync. And this is just, there's nothing here. But it's all about these two guys. There's a little bit of a follow the leader here. But like I said, you would have hit the take all profits key. You would have dumped out all your winners on that euro and let this guy go. So you get this dual fire method going, that's the best. You could just have separate accounts and realize that the 5 minutes is telling me to do this right now, and overall your total equity of your your net worth and all that stuff is really where it's coming. Here's the obvious entry, is to get back in here at this support. This is forever going to be the obvious good entry, right? Right here, right here. It's a revolving door there. Waiting for this guy to lead the pack now. If this guy can smash up, then I expect this will just be a pullback, and this would follow, and by the bottom of the hour, you're up on the whole thing. So bottom of the hour, looks like the British pound's going to pop its top here. We can't find any sellers, and we've gone sideways too long, so we have this doji on a bigger time frame. Now we're looking to get that follow through. It's been 10 minutes after the top of the hour. Make it to that round. This is pulled back, so I bought more here on limits. This could come all the way back and retest. This could go completely different directions. So you definitely would have got out of your Euro account and let this guy lead the way. But the Euro might play catch up if we can get to this. Spread here is a little bit wider by double. So you expect about double the move there, I suppose. Dollar yen's coming up into my sell limits. Just about to jump the creek here. We just took out the high of that last just by just a baby amount. Pretty tight spreads here. Alrighty then. So here we go. Go for the wide open spaces. So looking to fill that void. This is still tanking. So this is going to be a real, let's buy down here now. Scalp it off of this. Here's a giant swing trade. Just about almost there. So maybe the euro is going to come along after we drop into these orders. Get some follow through on that. Alrighty then, that's pretty boring stuff. So yeah, we're always waiting, just nudging its way up this double top. People are selling. They think they are. So this double top here is really not too valid when you're inside of a bottom like this. This is still itching to close that gap. It's not looking back on the 15. You can start putting sell stops on the 15 maybe. Cancel replace every 15 minutes, come up underneath it. The trailing sell stops here if you want to get short. Find an excuse to get short. Okay. Euro's possibly going to come back. I think they want to go down here. Yeah. We need to get some more space, fill some holes down here we left behind. Just got to backfill. If we get the backfill just in time here, like a half a pip, another pip, and then British pound goes ripping up, and it's just about to trigger my buy limits. Okay, so picked up more margin. This could tank now. Very unstable. Okay, they're coming into the buy limit. So right there, this got filled on that wick, and we could get a complete retrace back into, just took on another chunk of margin there. Still up on the day. Waiting for this one to follow through. This one just picked up more. And it could just come crushing all the way down. So let's put some hairy banks in. Just pack it down here with this super dense order. Every pip. It's very, ATRs are getting smaller and smaller here. Ascending triangle. Or double top. Still crushing down. Really want to get this price. Get spike into that, maybe. Otherwise, it's as good as it gets right there. Okay, let's go for the 5-minute chart. Nudging up against. Here's the dollar yen ready to make a stampede north. Still up in there all night long. Still up in there. Here we go. It's just kind of drifting down. Kind of fast now, actually. Coming towards this entry. Some fresh price. All right, let's see where this thing's at. Give it some bottom of the hour. Come back. Okay. So we're having a rally here, but I don't think that's what's happening in the euro. Euro still has to come into this. It just got filled down here. We just nicked the wick. Here we're cutting through into the round. So we still have to wait for the bottom of the hour to play out. About the whole retest there on limits added to the euro. Came all the way down to support. British pound filled the void. Cashed out a lot of stuff there. See, look how long it took to get to through this void here. And it had to pull back and do a double bottom and a big drama. Cutting north. There was only one 15-minute pullback to get in there. So we hit the round number targets. And we're up about $400. About $300 there. Here is the range bound. Still looking to fill the hole on this one. Get into this blue zone. And this is still just treading water. So let's see if we can make our another few bucks here. So I think I made like $500 here. So it's been about 8 hours, about 6 hours here. And I'm on the 15, which, if you can see the blue void that I was looking to fill, we filled that. And like I said, we could retest and then some, so we did. So if I would have cashed out of these and then reloaded those, and that's how I made that money. Because if you go to the 1 hour, you see that we had a backfill all the way through. This is the trend lines I drew on the 5-minute for that scalp. But look where the real money was to come back into here. Still got buy limits here that, see, I didn't delete those buy limits, so that's where I made most of my money. Because you could scalp to here, but see, you come all the way back to this top. And I bought all the way into that. And some of my stuff was cashed out at, that's the euro, here's the pound. The same story, different currency. right here. You start buying here to make that money. And the exit door's there, the floor. So you finally hit the floor. You could have sold there at the floor. That was my original target. And this, of course, is going nowhere fast, the dollar yen. So that's how it goes. This I sold up here, so I'm up $3 up here on the Smash Street. If you go to the 4 hour, so if I delete all this stuff, you're selling high. This was the top that became a bottom last night. You could have placed one ticket here, and you could have just bought that top, became a bottom. 4 hour. 4 hour of the pound is it revisits this top. That's not as big a move, but see, this is a 4 hour chart, which means this was Friday or Thursday back here. If you're still holding, right? But that's bouncing off. That could still go up. Now I can take my close all profits. I closed all profits this morning when we were climaxing into that wick right there. That was exactly 6 in the morning, right around there. See, it turned on a dime there. Here, still going up. So I'm looking to sell into that. Place sell limits up there. Still sitting up there. Last all day. Now those are going to disappear in about 12 more hours. I think I placed those. But yeah, that's what that looks like, and it's all limits. A couple stops there. So the one that's the limit drops. These are pure limits. These other ones are. If you place it above, it's a buy stop. You place it below, it's a buy limit. So I'm going to post this. I'm in $2 of margin here now. I'm up 1 penny. If I want to go totally flat here, I could wait till this is in profits. And just close all profits. And just go flat. And no market orders. Amazing, huh? So it's zero is considered a profit. I just went flat. And that's all there is to it. That's Sunday night. We got a whole day ahead of us, a whole week ahead of us. Well, at least got up $500 before. Now let's see if we can blow up the account now. But yeah, it's buy low, sell high, and it's stupid. It's dumb. There's a 4 hour. There's daily. Here's the daily euro. Making new highs. I'm selling up into that. Alrighty then. That's it.